Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Good morning traders, welcome back to Simply Forex. Coming to you live from the Philippines, very beautiful country. It's a little bit windy, as you could probably hear as well. But guys, that's the beauty of trading. You can literally do it from anywhere in the world as long as you've got an internet connection. I'm here for a couple of weeks guys, but yeah, don't worry, I'll be doing the daily morning analysis every single morning as usual. So let's take a look at the charts for today. Good morning traders, how are you? I hope you are well. What is today? Today is Tuesday the 11th of October guys. And as always, we're going to look back at yesterday's trades, we're going to look at today's potential trades, and we're also going to look at the news for today as well. Before that, guys, let me apologise. I'm looking a bit dark this morning. As you know, I'm on my travels, and this room is has quite a moody feel about it in terms of its lighting. And also, guys, yeah, did you check out the tornado on Discord or water spout? Yeah, crazy seeing that. I've never seen one before in my life, but yeah, check it out on the Discord channel. There's a few pictures of a tornado stroke water spout. What else? Yes, guys. Yeah, don't forget the Discord channel, guys. Yeah, so there's a link in the comments below the vid. So if you want to join our Discord channel where we've got loads of traders discussing ideas, then please join that. We would love to have you. And also, guys, if you're interested in being mentored one-on-one with myself, then please email hellosimplyforex@gmail.com. And also, guys, just a reminder, we normally do the live streams every Wednesday, but obviously I'm traveling for the next 2 weeks, so yeah, we won't do any live streams, but as soon as I get back, we'll have the live streams back to normal. Okay, right, let's start then, guys. So let's start yesterday's trades. So we had two potential trades from yesterday, guys, and the first one was this, euro against the US dollar. So we were looking to short this pair. And there's a couple of interesting things I want to show you on Euro US dollar and Pound New Zealand dollar. So it's a look back at yesterday's stroke tutorial today. So yeah, Euro US dollar. We're looking to short this pair, guys. Yeah, so price was clearly in a downtrend. Yeah, we had lower lows, and now this was a potential lower high. Okay, this was the last high. All right, so lower lows, lower highs, and then we had these bearish candles form. All right, and the idea was just to come from one of our grey zones, yeah, back down to this blue line, and then even potentially these last lows here. And as you can see, guys, it's already hit our our first higher time frame target. But the question is, could we get in on this trade? So we'll have a look on the H1, but before we do, let me just zoom in on these candles. So yeah, obviously these were the candles that were showing us sellers were in control, okay? And that's why we were continuing to short this pair. But as you can see, guys, they are contracting. Yeah, you've got this red candle, then this red candle, and then this red candle is smaller than the last red candle, and then this red candle is smaller than the previous candle. So this is so the candlesticks are contracting, okay? Basically means they're slowing down, okay? So it'll be interesting to see what this does today. But this is what I talk about when I say read the candles. This is telling me price is slowing down, okay? Candlesticks are, get my teeth in, candlesticks are contracting, so yeah, could we have a slight reversal before it comes lower? So here's a good example, guys. So if we read these candles, okay, so we had, okay, sellers may be taking control of the market, Sellers have definitely taken control of the market. We've got a little bit of indecision. Will buyers carry on? Will sellers come back into the market? No, buyers have taken control of this market. Yeah, then we have a candlestick that's getting a little bit smaller, and then a candlestick that's getting a little bit smaller, and then we have a change in direction with this green candle. Okay, so yeah, just try and read what the daily candlesticks are telling you guys. Okay, so I'm seeing a contraction with this pair. Anyway, let's see if we could trade this pair. So if we go down to the H1, guys, yeah, we had these two grey zones mapped out. All right, so we had this grey zone and this grey zone. Okay, but as you can see, price didn't come up and hit these areas. Okay, but we do have the pattern that we all love. So you did have an entry here. Okay, so these were the last lows on the H1. Yeah, come back down, tested it, tested it, tested it. Okay, so this was a good area of support for the H1 until it was broken. Yeah, so this candle here, guys, we get a break of the H1 structure and we get a retest and a rejection at the same time. Okay, so you could have entered on this candle here and take price back down to these last lows. All right, so yeah, I didn't enter on this pair. I actually entered pound New Zealand dollar, but yeah, that would have been a perfectly reasonable trade. Okay, so let's zoom in a little bit. Let's imagine. Okay, so those were those last swing lows. Let's include those. Yeah, so this was the last low. Sorry, guys, get my pink pen, my macho pink pen. So yeah, as soon as this candle breaks these lows here, yeah, we are looking for short from this pair. We get a nice retrace with this candle here. Okay, and then we need a retrace because how close our higher time frame target is. We would get a slight retrace back up into this zone. We could enter and then take price back down to this blue line. Okay, and that would have been a perfectly good trade, and we love this setup. Break, retest, take it lower. But now, guys, I'm just going to show you something about having an aggressive stop. Okay, so with this trade, remember this is our entry candle. Yeah, so we could have entered once we got a slight retrace, and then price starts coming down, and then we could put our stop above here. Yeah, because this candle is and also technically the entry candle. Okay, and we would have got our risk to reward, yeah, just about of 1:1. Okay, but remember, guys, once we get our 1:1, we close 80%. Okay, so we get a slight retrace. When price comes down to here, we close 80%. Okay, so this area here is my 20% stop loss. Yeah, only for 20%. I've already closed 80%. But if you have an aggressive stop loss, which this is, look what happens here, guys. This candle here takes out your stop loss. Yeah. Okay. Whereas if you put your stop loss above the last swing high on the H1, which is here, yeah, prices come down. This is the last swing high and come down. If you put your stop loss here, yeah, then this area does not take out your stop loss. So the pros and cons of having a tight, aggressive stop loss are obviously you can, your risk to reward is better. Yeah, because you have a tighter stop loss, you can your rewards are potentially better. But it doesn't make any difference to your money management. If your stop loss is here or here, you're still losing X amount of dollars. It's the same. But what your risk to reward is potentially better. So tight stop loss here, you get taken out. If you give it a bit of room here with this stop loss, you don't get taken out. Okay, so just some of the pros and cons of having a tight stop loss against a stop loss above the last swing H1 or low, high or low. All right, guys, so just wanted to show you that. I didn't trade that pair, but this would have been this, retrace back down to here would have been a lovely entry. Okay, guys, so that was Euro US dollar from yesterday. The next trade was this, guys. This was the pound against the New Zealand dollar. Okay, so why were we trying to buy this? Well, it's clearly in an uptrend, guys. So, yeah, price comes up. We get a sort of crazy reaction down there, but then price comes up and breaks these highs. All right. So structurally, we are in a downtrend. And then price came back down. And then we got this wick. Okay. And then we got a positive candle as well. So we were willing to take price up to this blue line or even this blue line, guys. Okay. So upward trend, a wick reaction followed by a bullish candle, although that could have been more bullish, to be quite honest. And if I zoom out, guys, yeah, this area here. Okay, my pink pen. What is happening to my pink pen this morning? Yeah, so these last highs here have been acted as support here. All right, so for all those reasons, we're looking to buy this pair. If we drop down to the H1 chart now, guys, as you can see, we got a nice reaction in one of our grey zones. And I traded this one yesterday, guys. So obviously, guys, this lower grey zone didn't come into play. All right, so yeah, I'll just ignore that. But this grey zone did, guys. Okay, and as you can see, when price came down, we got this candle form. Okay, we got this candle form at the last H1 lows. Okay, remember, guys, from yesterday, I was saying how much I enjoy being with H1 structure. Makes me happy. Yeah, if my day chart is long and the H1 structure is in an uptrend, I am a happy trader. They're two pieces of confluence that I really look for. Okay, so yeah, if I now zoom in a little bit, so we had this entry candle here. It's come down to our grey zone, reacted at these last H1 lows, and then bang, we get a super bullish reaction. Okay, so a couple of things here, guys. Remember, if a few days ago I explained how you can enter very bullish candles like this. So if we enter here, okay, and put our stop here, then to the last H1 high, just technically here, okay, our risk to reward isn't great. Okay, so this would be your reward, but then this would be your risk. Okay, bear with me, guys. A mouse pen is never easy to draw with. Okay, yeah, but this would be your reward here, and this would be your risk. Okay, trade doesn't make sense. So I'm going to show you a few ways to trade this bullish candle. All right. So the first one, guys, is this. Yeah, let's imagine we're trading 100k lots. Okay, so I'm going to put this over here. That is quite impressive with a pen mouse pen, whatever you want to call it. Right, and remember, this is our entry candle. So first of all, we can trade 100k if we get a retrace, because that risk to reward didn't make sense. Let's say we get in here for 100k. Okay. Yeah, we put our stop below the low, and then the last H1 high up here. We now get at the right risk to reward. Yeah, this is our stop. This is our target. As you can see, we get a nice risk to reward, but we have to wait for a retrace on that entry candle. Yeah, and we get it on the next candle. Okay, so you could trade it like this, guys. Yeah, and then it comes up, hits our first target. We close 80%. All right, and then we let 20% run. And as you can see, it hit our higher time frame target as well. This was a lovely trade. Okay, so that's the first way you can trade this pair. This is what we've been looking at, guys, and this is just the standard way of trading this pair, but you need a retrace. Okay, next idea is this. So we've got this pen. Every time I delete it, it deletes everything. But anyway, we've got a 100k lot. This time, because of this large entry candle, we could then enter 50k. I explained this a few days ago. We could enter 50k at this at the close of the candle, and then we could enter another 50k on this retrace here. Okay, and then our risk to reward would still work out mathematically. Yeah, this would be your average price here. Okay, your stop would still be here, and remember, this is our target. Okay, so you still get your risk to reward of 1:1 because this here is your average price. Okay, so this is another way of trading this pair. If you get a large entry candle, split your trade into half. Yeah, enter 50k at the close of the candle and 50k on a retrace. All right, so this is another way of trading it. And let me show you this, guys. So when I'm looking for this second 50k, yeah, I'm thinking, where is a good place? That is a question mark, believe it or not. Where is a good place to enter my second 50k? Okay, so if we drop down to the M15 chart now, I will show you what I look for. Okay, so, yeah, which one is it? Yeah, so this is our entry candle, guys. So this was this H1 candle here. So these 4 candles here. This is our H1 entry candle, but this is the M15 chart. But you can imagine those 4 candles together will look like the H1 bullish candle. All right, and then I'm thinking, where would be a good price to put our second 50k lot? Okay, so if you look at this zone here, even on the M15, we are seeing that this is a good zone. It was once support, comes down, it then became resistance. Yeah, once it breaks back up and comes back down, we get this wick form at this grey zone. So you could just, and remember, we're committed to this trade because of the H1. Okay, so you could just enter in this zone. You could just enter 50k, your second 50k in this zone, or you could wait for this candle. Yeah, this bounce off of this wick on this candle here. Okay, so, and then enter 50k. Either way, it's an excellent place to put our second 50k lot. So if you ever come across a large candle, you know, sometimes they're almost untradeable. They're too large and it doesn't make sense with your risk to reward. Then drop down to the M15 and find a zone like this that is a good area to buy from. And if we buy from here, look at what happens. All right, guys. So yeah, a good little tip that for refining your entries even further using the M15. All right, if we go back to the H1 now. So either way, guys, yeah, if you traded 100k lot on a retrace or you entered 2 trades, okay, then the first target, you get your risk to reward of 80%. You get your risk to reward of at least 1:1. We close 80% here, guys. And then what I've done so far, guys, is once price gets to my first higher time frame target, I have closed 10% of the remaining 20. So I'm stilling this trade for 10%. And what I've now done is put my stop to here. So this is the remaining 10%. My stop loss is here. And I will just trail this stop, potentially back up to those last highs on the daily chart. All right, guys. So yeah, really interesting pair to look at and study yesterday, this pound New Zealand dollar. And also, guys, it was a great trade. Yeah, I hope you took it. Let me know if you did. Right, guys, those were the 2 trade ideas from yesterday. So, guys, another profitable day yesterday. You could have traded Euro US dollar short or pound New Zealand long. You would have made money, guys. Yeah, so if you enjoyed that recap, then please come join us. Yeah, subscribe to the channel, smash that notification button, guys, and also smash the like button. Help support the channel. Merci beaucoup. And also, guys, I know some of you just tune in for the trade ideas. Yeah, and I get it, but you learn so much from the recap, guys. Yeah, analyzing the trades from yesterday's, different techniques we use to enter, how we can stay out of trouble, these reading candlesticks, yeah, all of these types of things become apparent in the recap, guys. So yeah, watch the recap. Okay, right. So today, before we start the trade ideas, actually, guys, my editor will kill me. He's not here. Obviously, I don't go on holiday with my editor. But if he was here, he would kill me for not mentioning this. So, guys, we've got a Discord channel in the link. There's a link in the comments below the vid. So come join our Discord channel. It's growing like a plant, a beautiful plant. And also, guys, if you're interested in being mentored one-on-one with myself, then please email us at hellosimplyforex@gmail.com. And also, guys, just one more quick reminder, for the next 2 weeks, because I'm away, I'm on holiday, we won't be doing the live stream. All right, but I still be doing my daily morning analysis every single morning. All right, guys. So, yeah, let's look at the trade ideas for today, for Tuesday, the 11th of October. And we've got 2 trade ideas, and then there's 2 more that I'm interested in, let's say. Okay, but my first trade idea, guys, is this. This is the euro against the Canadian dollar. Okay, so we're looking to buy this because it's clearly in an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs. Yeah, and now we're potentially seeing a bounce off of these last highs. Yeah, so a bounce off these last highs again. We love this pattern, and it happens so often. But yeah, what was once resistance here, where when it bounces off here, becomes good support to come higher. Okay, so that's the structure and what we're looking at. If we just zoom in on this candle, guys, yeah, you can see, yeah, that this candle, admittedly, guys, it could be more bullish. Yeah, it's like a doji, to be quite honest. But the fact it's part of this pattern, and it's bounced off of these last highs. Yeah, and like I say, what was once resistance becomes support. This is all about the pattern and how much we love this pattern. And we do get, yeah, with this wick here, we do get a big enough bounce off in terms of this wick. All right, so for all those reasons, we're just looking to take price. To be honest with you guys, this would be my target. Yeah, this 13500 level. Okay, so we're looking, the higher time frame target would be this 13500. All right, so we're looking to take price back up to there. If we now drop down to our H1 chart, remember the day chart is why am I longing? And I gave you the reasons. Now we're going to drop down to the H1 chart. And this is our how are we going to trade this? So it's a messy chart, this, guys. Yeah, there's not, yeah, it's just messy. That's what I'm trying to say. But this grey zone here, yeah, this grey zone here also corresponds with these lows here, guys. All right, so this grey zone here historically is a good area, and also we're seeing price react currently as well. So let's zoom back into our grey zone. All right, so we've seen price react here. We've also seen this reaction here. So what we want to see, guys, is this. We want to see a retrace back into this grey zone. We want to see a bullish reaction. Could be a bullish candlestick pattern. Whatever it is, just tells us that buyers are in control. Okay, comes back down. We can then enter the chart. We can then take price back up to the last H1 high. We don't know where that is yet. Okay, could be here, could be here. We don't know. But we take price back up to the last H1 high. If we get a risk to reward of 1:1, yeah, we close 80%, and then we let 20% run up to our higher time frame target. Okay, guys, if that doesn't happen, then price could make its way all the way back down to these last lows and test these. Okay, if it does, again, we want to see a bullish reaction. We enter the chart, we take price. I would take profit, 80% of my profit back into this area here. Yeah, close 80%. Okay, back in this grey zone, and then let 20% run up to our higher time frame target. All right, guys, so two grey zones that we could potentially enter our buys from. All right, guys, Euro Canadian dollar, we're looking to buy this pair. Next trade is this. This is gold against the US dollar. So what I like about this trade, guys, is this. So we need to take a weekly view, guys, of this one. All right, to start with. So as you can see, guys, yeah, if we look back historically, this grey zone here, yeah, is an important grey zone. Okay, this area here. And then if we go back, and it's clearly in a downtrend, yeah, lower lows, lower highs, lower lows, lower highs, lower lows. All right, now we're potentially seeing a bounce off of this zone. Okay, so that's the weekly view. We go back to the day chart. We haven't had a structure break here because these last highs have held. Yeah, we are still in a downtrend. Okay, so these last highs here have held. So this is also more confluence why we can short this pair. And there's more confluence, guys. And also, yeah, so let me zoom in a little bit. Yeah, this bullish candle here. So A, it's a very bullish candle. And B, it's closed outside of this grey zone. Yeah, so these lows here, which is why we plotted this grey zone. This red candle that I've highlighted has closed below all of that. All right, so lots of things to like about shorting this pair. All right, I'm going to remove this large grey zone now, guys, because we're going to look at our H1 entry chart. Okay, but we're looking to short this, guys, down to this blue line here, which corresponds with these last lows here, or even this blue line here. Okay, so let's look at the H1 now, guys, to see where and how we will enter this pair. So we have quite a large grey zone, guys, and it's quite far away. Okay, so there's a couple of things we can do here, guys. So price could retrace up to this grey zone, because as you can see, this is the only last area where price has reacted. Okay, yeah, this is the last area price has reacted. All of this area here, it just hasn't reacted. All right, so fine, yeah, if price comes up to our grey zone and we get a bearish reaction, we can then enter this pair and we can take price back down to the last H1 highs, close 80% and then leave 20%. Sorry, H1 lows, close 80% and then leave 20% to run. Okay, so that's the first idea, our first criteria on how we can enter on the H1. Because of the bearishness of that daily candle, guys, what we could also see is this. I would be willing to trade the first bearish candlestick pattern. All right, so let's say price just retraces up to here. Okay, and then we see a bearish candlestick pattern, or just a bearish candle tells us sellers are in control of this market. I would still enter that as well. Okay, and then we could take price again back down to the last H1 highs, stop saying highs, back down to the H1 lows, close 80% and then leave 20% to run. All right, guys, so yeah, that's how I would trade gold. So Euro Canadian dollar we're looking to buy, and gold against the US dollar we're looking to short. Okay, so those two are my definite trade ideas. But then I also like these and don't like these. So we've got this. So this is oil, guys. So again, let's start with the weekly chart. Yeah, so as you can see, guys, this grey zone is an important zone for oil. Yeah, it was once support, 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 support. And then when it broke, it has become resistance. Okay, it's come up and potential resistance again. Okay, so yeah, I like this in terms of structure. So weekly chart is in a downtrend, the structure is in a downtrend. Okay, and it's come back up and tested this grey zone and potentially these last weekly highs. But I don't like, for obvious reasons, I don't like the bullishness of this green candle. Okay, so that does put me off slightly. Okay, so if we go down to I'm just showing you the things I like and dislike about this trade. Okay, so I like the structure. I like the fact that it's reacting at this grey zone. I don't like the bullishness of this green candle. Okay, we go to the day chart, guys. You'll also see this is in an uptrend. Yeah, the day chart is in an uptrend. Yeah, it was once in a downtrend, lower lows, lower highs, lower lows, lower highs, and it was using this diagonal channel as resistance. Yeah, you can see this grey line here. My God, I've never drawn such an excellent line with this mouse. Yeah, proud of myself. Okay, but this was a diagonal channel down, and this is broken out of here. So we've broken this high, and we've broken this high. So day structure is in an uptrend. Okay, so remember, I tend to trade with the daily trend, but we do look at against trend trades now and again. Okay, and this would be one. Okay, but now price has come up into this grey zone, and we've got this bearish candle form. I would argue this is a bearish engulfing candlestick pattern because, yeah, if we take the body of this wick, the previous wick, this red candle has closed below 50% of it. All right. If I show you what I mean using the ruler, so the body of this green candle is 420 pips. Okay. So this red candle, to be classed as a bullish engulfing candlestick, a bearish engulfing candlestick pattern, this must close below 50% of this body of the green candle. And if we look at this, yeah, this is at 230. So it's just above half of the body of the previous candle. I hope that makes sense and I'm not waffling too much. All right, so for me, this, yeah, is still a bearish engulfing candlestick pattern because it closes below 50% of this previous green candle. Okay, so again, we like this. We've seen a bearish reaction at the grey zone. On the day chart, we don't like the fact that it's against trend. We do like the fact it's in our grey zone, and we do like the fact that we have a bearish engulfing red candlestick pattern. All right. Now, what you'll see, guys, is when price gets to these zones, what I really like to see is a break in H1 structure. So how I would trade this, guys, it's come up to our grey zone, which we know price is going to react at. This is now the H1 chart, and what I'm seeing is this. Price was in an uptrend. Remember, guys, if we don't get higher highs, what does that tell us? I want you to all scream the answer down the video. I can't hear you, but it tells us that price could be breaking down. Yeah, if we don't get higher highs or lower lows, structure could be potentially breaking down. Sure enough, it does. Yeah, price breaks these lows here. Okay, and then H1 structure has changed. What I would look for is price to come up to this last low. Yeah, we see a bearish reaction, we take price lower, or price could even come all the way back up to this last high. But again, we want to see a bearish reaction and take price lower. Okay, this area here for me is my bread and butter. Okay, but US oil short, and that's how I would trade it. Another one, guys, is Euro Aussie dollar. Okay, is another one that I was looking at, and I like it and dislike it for different reasons. So obviously this area here has been holding. Okay, so this last historic high has been holding here, and also yesterday this holds. Yeah, it closes back below these last highs. So I do like the fact that price is just about holding at these highs. So we like this. If we zoom in, guys, we don't like the fact that this candle is quite bullish. Yeah, I know it has a top wick, which closed black below these highs, which we like, but the body of the wick is still quite bullish. So we don't like that. All right. But again, once we get to these last highs on the daily chart, guys, we can just look for a H1 structure break. So I would start shorting this if we get a H1 structure break. So this is the H1. You can clearly see it is in an uptrend. Yeah, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And again, yeah, could this be the red flag that we're looking for? Yeah, prices, as you can see, this red candle as we're speaking now is forming. Okay, so this could be telling us we haven't got a higher high. All right, so that's the first red flag. If I zoom in a bit, yeah, so if this high holds, okay, this is good. And then what we want to see is this last low here. Okay, if this, yeah, like I say, if this high holds, and this is quite encouraging, the candle we're seeing currently, then we want to see a breakdown in price, breaks this last low, then we have a change in structure on the H1. We get a retest into this zone, take it lower, yeah, like the oil trade, or even these last highs, take it lower. Okay, but for me, as soon as this last high is low, this last low is broken, I am willing to enter shorts. All right, guys. So yeah, US oil and Euro Aussie dollar. We're trading the H1 structure with these guys and following what the H1 structure is telling us. All right, guys. So yeah, they're the trade ideas for today. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and want to receive it every single day, then please subscribe to the channel, smash that notification button, and also smash the like button, guys. Help support the channel. Apologies if I'm a bit dark today, but I am traveling, I'm on holiday, and the light in this room is not amazing. Right, news for Tuesday, the 11th of October. So overnight, guys, nothing of interest. And today it's all about the pound. All right, so first two pieces of news are at 7 o'clock London GMT. Yeah, we've got average earnings index and the claimant count change. So employment data, 2 3-star ratings coming out at 7 o'clock. So this could really move the pound, any pound pairs, guys. If we carry on down, yeah, as you can see, the last piece of news as well at 7:35 p.m. Coming out of the UK, we've got Bank of England Governor Bailey speaking. So when he speaks, he obviously can impact any pound pair. So, like I say, guys, just pound news today. If you're in any pound pairs, then obviously you must be aware of this, guys. But that's it. Yeah, I hope you've enjoyed the vid, guys. If you have, please subscribe, like, and share. I hope you have a great trading day, and I'll see you tomorrow.